All right, friends, that time again. It is recap time. Let's see how into Yellen today, how we did with our predictions, and what happened. So a couple different things I explained in the other video on predictions. I went through a bunch of these little drawings, and I said what indicator we're going to look for on what. We're going to start on the 30-30 here real quick, 30-day, 30-minute. And let's get our drawing tool set up here. There we go. So as we had that beautiful crack back down, we had mentioned our weekly Fibonacci levels, 414.72, walk it down to 412.75, all the way down to 411.40. And I was hoping, to walk it back down there after a pop to drop for the week or chop consolidation lower. We had only had two instances. I did not expect any kind of upside all the way back up towards like 417 or anything. Max was about 416. I said in the video as well. That would have been best case scenario, like crazy case scenario. But you notice right here at the open, it showed you perfect weakness at the prior unfilled gap and 414.72 weekly fib. Also, we had mentioned that. So when we do get that, the moving averages have to catch back up. And then I did a bunch of drawings in that video when the day ended here. And I said, we're going to watch for the oscillation indicators down here to give us some resets, right? So watch that video again. I'll include it in the description and in this post. If you have not watched our prior videos here, just kind of keep up the day-by-day recap. So if we see the ending close right here, push back into 415, I said moving averages have to catch back up. 10 SMA actually became resistance very early. Now let's take a peek at the oscillation. We said it was way over cool. And I said the 30-30 RSI has to climb back towards the 50-point 250 or just below. That's what we said in the video. What happened? It retraced from the overcool just below. Topped action right in the front, okay? Oscillation also put in a small buy wave. 30-30 got the cross back over, and then it turned right back around, not even close to the halfway point on the MAC, but the moving averages swapped. So let's take a peek here. Cross. Small oscillation, okay? No small buy wave. We're looking for a little tiny buy wave here, but it ended up doing a no buy wave, only like a tiny blue, tiny blue candle you see right there. Not even a wave, so to speak. And then the RSI also did what we predicted to come back to about the 50 and then come back down. Now, the surprise of the day was actually increasing the distance to that downside that was not expected. So 409.98, just call it 410, was the base. That is the bottom. The 3820, our golden pocket and strongest Fibonacci retrace right here, becomes one of the major supports, right? And that major support would have signaled the bottom. So we were 100% short, absolutely no longs, and short from 412.75, walking it down like we explained in the last prediction video. So walking it down, cutting through this weekly fib, 412.75, cutting through this, 411.38, down to 409, and some change to 3820. Oh, where did it hit? Right at the bottom. That was the extension target. I would have liked it to see it by the end of the week, even past the 411.40, coming down further to the 409, but we got a huge upset overnight, and then through the pre-market just ducked out very fast. Which is all fine and dandy. So if we back up the indicators here in the longer standing time frames of the 30-30 and look at some of these trade indications that we would have had through the afternoon and late day, as we walked ourselves to this gap, let's take a peek. So that's a little too close. There we go. So when these rolled and we had the short, so we made all of our money on that short side today. I did get a couple little long pops, but then I just kind of stayed out all the way till the end. And of course, I told my team to play at the extremes. And what I mean by that is the extreme level. So if you go into a 5-minute chart and you're trying to mess with a little bit of the back and forth pops and this low flying choppy action you've seen all in the 5-minute, that is not the extreme. The extreme is only trading when something hits a huge price level. Obviously, the Fibonacci being the main. Now, our 3820 was the end-all be-all. That was the long signal. You notice the divergence that it put in, even on the 5-minute. Sell wave large, sell wave small. RSI low, higher high, higher low, higher low. You notice that RSI is slowly showing you divergence in the relative strength index as the price action's kind of floating lows, telling you that, hey, we might be up to something. And if you look at all those higher lows on the RSI, that last squeeze where the shorts had to get out at the end of the day there, got pushed up, came right back to the next major. And these majors are in between weekly Fibonacci ranges, okay? So if you notice, I have another hidden Fibonacci system here. So in between the 50 and the 3820, we call this the golden pocket. What's one of the best Fibonacci pockets they ever were, ever will be. I took a 100 to 0 extension in that pocket. So I dragged my Fibonacci from the top down, expecting a long biased move to the 1618. That is how we use our Fibonacci's here. So let's take a peek at that. As you've seen it through, the neon purple is the 1618 long. So as I just said, if you would have used a only extreme, so you would have shorted the break of the 50, walked it down to that. Now there was some abrupt craziness that would not have been all that fun, but waiting for that support bounce here, absolutely no longs in the morning. Anything after 10:30 Euro close, you could have been looking for that long, and that's what we said. So it came at about 11:30 Central. We'll call it 11:15, and then it created a higher low. Then pushed back towards moving averages, came back down, created another double bottom set of higher lows, all while the MAC was increasing. We started to get buy waves back here at the end. Small sell wave, you notice on the TTM. So you look at buy wave, small sell, buy wave oscillation up, along with that RSI attempting to get back into that top channel. And then you notice that after hour squeeze with the oscillation worked perfectly on RSI. It shot up from here, boom, hit the 1618 target. So if we have that fib in between 50 and 3820, anything above 410.50 right here, that is the pocket of the inside hidden Fibonacci. So anything holding that. So there's a hold right there. Squeeze, target 1618, great. Came back down, found some more support, squeeze, squeeze. Now it made it to the 2618. And that's where it closed. So that is pretty big resistance right at the open. And as futures traders, we trade through the after hours stocks, options. Stocks you can trade after hours, but options close 15 minutes after bell there on SPY, and obviously instantly on equity. So we try not to trade those unless we're just doing some sells. But the futures could have traded this whole after hours move where the shorts got exhausted right off of the biggest support pocket of the 3820. You've seen all that upside divergence helping you out there. So let's take a peek at the 3030 and what's to come. And please check out that other video if you've missed the predictions on the wash. We actually got a further wash on this one, which is pretty cool. But now what's next? Well, I think more chop, and obviously tomorrow all about jobs. So we have the jobless claims, we have PC at the end of the week, we have a whole bunch of mess of tomorrow. So I think we're just going to get some chop volatility and not too much anything else. So if I delete this intraday fib, we're going to keep our weeklies on, which you're going to want to see on the futes as well. So I'll do this one on the futures because we had this extreme abrupt pop. We had some big option orders come in there as well, freaking the market out here a little bit. What you'd want to see is maybe just a temporary relax long to push back moving averages. Okay, so when we said the moving averages need to catch back up to further resistance, when something travels this far down in a consecutive 2 to 3 day downtrend, you get the pop and they start flying because shorts got to cover, longs finally get in for the scalp, pushes price action up. Well, if we jam this up just a little bit here, the 100 EMA and 50 SMA, you're going to see these come in here, very close. So you see these candle patterns, 50 SMA in the dash red, 100 EMA in the green. So price action held the 50 SMA daily. That's this giant one right here on the daily chart. And that's that red dash line you see just cutting across the screen right here. For some reason, OBS isn't picking that up, but if I move it back and forth, you'll be able to see it there. I'm not sure if you can see it in the preview screen or not, but that is where it is. Now, moving up, the 100 EMA is usually the contact point of interest of max resistance when a type of play like this happens. So let's look at the oscillation indicators on the 3030. What do we say about the standard deviation? Well, a lot of the time it does not like to go past the -1 +1. Okay, so if this is our regression center trend, here's +2 in the green, -2 in the green, -1 in the yellow, +1 in the yellow. So anything from the center line of the regression trend getting outside of that standard deviation does not persist. There's very less likely. That's why we did a huge short right here into the standard deviation 2, walking it down to the center, and even made it in between the 2 and 1 again today. So that buy up needed a catalyst. What was the catalyst in between those standard deviations? The 50 SMA daily. Yes, right here. So in between -1 and -2, we had a abrupt catalyst interfere with that price action, right? So we could have magneted down a little bit, maybe hit the Fibonacci here, which would have been 4110.86. That's a 3820. So again, in between the 50 fib and the 3820 is the golden pocket. This is my pocket on the futures for a long, right here. That's where the pocket is, between 3820 and 50% Fibonacci. It hit a 50 SMA daily, and that disrupted the fib to fib connectivity. So when we look at this upside manner, we're going to look for a open and a relax, hopefully, and we got to see over under the 50 SMA for the small time day trades in through the after hours, in through the wee hours of the morning, and what happens in the morning. So what you're going to look for is over the 50 SMA, If it ever gets over, you're going to look for it to chase back down some of the backsided fibs like 61.8. But the only bad part about that is we have resistance here at the weekly 61.8. We have resistance here at yesterday's lows. And we have that 2618, remember, on SPY that it closed into after hours. So there's a ton of resistance. So my assumption is we're going to open up, hopefully get a little pullback here. And this is going to open up in about 10 minutes. On the futures and 5 p.m. Central. And if this happens to get a little bit of a pullback, ends up riding that 50 SMA 3030, right, and gives it the oomph to push to the 100, well, I'd watch that for a backtest push up, right? And now we did leave the gap on SPY, so I'm not overly bullish here. I'm just looking for to play counter trend again. So when the counter trend goes, I only look for that long, so we went dipped, and I got that long end of day here. Not nearly as much as I should have meat on the bone, but it ended up being green. But counter trend after the huge downtrend, it popped back up here because of that 50 SMA daily. So for the rest, that is it. 50 SMA 3030. We're going to look for either a press into the 100 EMA and the 10 SMA daily, which is the big blue dash line right here. That's the daily representation of the 10 simple moving average. And I'll be watching that 100 EMA. So we got a 50 bearish cross. So if we do pop from here and come into some of these resistance points and continue down to the regression trend here, 0 and weekly is my assumption. That's what it'll look like. So we take a peek at the weekly real quick, see if there's any moving average help here. So it is on the weekly 10. Yep, we closed above the weekly 10. Wow. Awesome. Let me clean this up a little bit. There we go. So something to keep in mind too with that 3030 is a weekly 10 SMA. That guy right there can be a pain in the butt too for any kind of oscillation restriction. That's going to help push those oscillations up and hold up. One thing I do want to make a note of here, just like we timed to the bottom after the weekly oscillation right here off that higher low, mass divergence into the 200 SMA moving average right here. That 200 SMA moving average, massive divergence in the MAC, TTM, RSI, all had it. The oscillation ahead of time now is showing you short signals with these oscillations right here. So again, we have been short, but if RSI is the last one to catch back up and kind of break through that 50 and trend down a little bit, and it wants to come back down and test moving averages like the 100 and 50 on a weekly time frame, do not be surprised into the end of the week and further. Now, we do have a good gap down to start that on the daily. Doesn't mean that can't get filled and then turn back around. So it's not just a guaranteed trend. We look for those intraday confirmations as well, but we do have a lower TTM wave here. MAC oscillation has a lower wave right here, and RSI is giving up just a little bit into that topping action, but it is still over the 50. So please be careful of that halfway retracement point of the relative strength index. If you look at the daily chart right here, there's that 50 SMA daily, right? And this has been a pretty monster support. Notice it last time right here, right? Notice the breakout here, back test, back test. So now this is the point of interest where does it stay under the 10 SMA, chop a little bit, put in that lower high, continue down to regression trend center and some of those moving averages like the 100 EMA that we had seen ourselves underneath, or does this happen to just go back into chop nonsense? Now, all the good, easy plays that we predicted, part 1, 2, 3, 4, and now this is 5, are all done. The data for tomorrow is going to be out of control in PC Friday. Probably won't be here for that, but it's going to be pretty crazy as well. And that's about it. So watch your over under just for a day trade. We're going to watch the 30-30. Pullback out of the gate here would be best case scenario, to come back down and test some intraday early sports. So coming from the close here, testing pre-highs, some back tests of some of these back high candle tops, a 50 RSI to confirm the channel, some kind of confirmational hit in the longer standing, because if it just squeezes out, just goes bonkers upside, it's just a no trade. I wouldn't even bother chasing it up there, and we'll just see what happens in the morning. But when the futures open up here, and it does give us intraday over hot signals on this 5 minutes, so just to keep in mind, again, we're into the 2618 resistance. We are maxed out on tons of these oscillation indicators, so I'm assuming it open and kind of a pullback to either try to backtest the 200 SMA 5 minute along with some of those prior top support candles. Maybe let's check at the 1 minute real quick before we end this here. Okay, we are in top channel on that. We have a lower high cycle on MACD. So yeah, this is good. This is good. So if we do happen to open up here and just press. We should have an easy wipe down to at least the 100 EMA 1 minute. Let this RSI come back down to the 50 on the 1 minute, maybe one more pop, and then it goes and trickles down. But regardless, I think a scalp sell right at the open for a potential downside scalp would be great. And then the rest of the day is all data dependent tomorrow. So we don't have any super clean predictions for tomorrow, but the last 5 worked out rather well. So stay tuned for the next. We'll catch you then.